Okay, everybody, it is me, Gregory Mannarino. Just lovely, isn't it? Look, you and me, we got to talk. A lot of stuff going on here. Funny stuff, too, from the Fed today, the Beige Book, Fed President Williams, and all kinds of things. All right, so let's do that. So where to start? How about this market? Okay. What happened? Really nothing with regard to the stock market. A relatively flat day. Now, those of you that understand the dynamics of the market know clearly why this market really didn't do anything today. So I'm talking about the major indices with fractional losses here. Nothing major whatsoever. Crude oil today catching a very nice bid. Well, what was missing today from the four dynamics needed to prop up the stock market? Well, let's see. Number one, the 10-year yield. 10-year yield is stable. This is usually a good thing for the stock market. It's 1.34. Okay, market likes it here. No big deal. Yet, the market did not gain today. Okay. Number two, the dollar. The Dixie. The dollar's relative value. I think I need to clarify this a lot because people are still confused. Okay? Dixie, not standalone. It's a measure of the relative value of the dollar versus other currencies. Okay, so stronger, not good for the market today. Okay, there's, I guess, strike one. I already explained to you about crude oil. The Fed's balance sheet is continuing to inflate. As a matter of fact, we got proof positive today, yet again, that you and I remain on the right side of this, and the Fed's balance sheet will continue to hyperballoon. Forget about any kind of taper. Although we did hear from Fed President Williams today. Oh, we're going to talk about Williams in a moment. Just wait on that deal. So anyway, that's the story for the market. Just covered those things. Let's talk about cryptocurrencies. They're trying to make a rebound here. Okay. Finding a floor, whatever. Again, people, you know what I'm going to tell you. What is Gregory going to say? What's going to come out of his mouth? Not my tongue, but I'm here to tell you that this is a buying opportunity, as I've been explaining to you since like a long time now. Buy the dips in everything. That's pretty much where we need to be in this twisted, upside down, backwards and sideways, distorted freak show of the highest possible order. It's not going to stop. Okay, gold and silver today. I know how frustrating this is to all of you out here. It did fall under pressure. Again, both of them, nothing major, but under pressure nonetheless. Now, remember what we're talking about. This is not physical metals being dumped onto the market. This is the derivative. And, it's not on the elemental chart. They don't exist. They're not real. You understand? But they're being dumped onto the market here. And that, of course, drives the price of the hard asset. Have you ever heard of something like this before? Well, of course you would in a market that's doesn't make any sense whatsoever. But that's that story with regard to that. Now, so what I want to do here, I want to talk about a few things. So we heard from the Fed today, a Fed president, the Fed's Beige Book, which is a measure of business activity. And it's just lovely. It's really is lovely. So let's start off with the creature, Fed President Williams. Now, notice the words he's using. They always use the same terminology. Here he is saying, according to this thing, okay, not human being, it will be appropriate. That's the word, appropriate, for the Fed to taper this year. You see, look, this is the game they play. You got one group of Fed creatures saying one thing, another group of Fed creatures saying the other thing. This is a deliberate act to keep the market kind of off balance, but it didn't work. Because you see, if the market really believed today that the Fed would taper this year, forget about the fractional losses we've had in the market today. We would have fell hundreds of points, maybe 1,000, maybe 2,000. I don't know. And we would have seen a reflection with the dollar, and we would have seen a massive jump higher with regard to the dollar. We would have seen the 10-year yield also react. We did not see this. Okay. So the market's laughing at you, sir, Fed Williams, you creature from wherever you're from. Now, apparently, again, let's talk about the Fed's beige book. This is, again, a measure how the Fed, whatever they do, it's all dog shit anyway, but, how they kind of put this into perspective for us, the business activity. So the Federal Reserve admits in their beige book report today that the economy, I got to calm down for this one, is in fact slowing. Duh. We don't need the dog shit Fed's beige book to tell us that the economy is slowing. The economy is not just slowing. It's in free fall and is contracting. Okay. So, ironically, actually, we'll get to that too. So I want to get this verbatim so you can laugh a little bit. So I wrote all this down. I had no choice. U.S. business activity is suffering due to higher inflation. Oh, imagine my shock. You mean it's not temporary? And of course, shortages. Lovely. And, what does this mean? The Fed went on to say that these extra costs, business activity, because, they're dealing with higher inflation and shortages. Well, guess what? You're going to pay for it. Imagine Greg's shock. You can't imagine how shocked Greg is. I'm sure you're just as surprised because I told you this was going to happen anyway. So yes, U.S. business activity, they are dealing with higher inflation, and apparently shortages, and they're going to pass all of those costs right on to you and me. It's just lovely. Now let us move forward here. I'll tell you, how many times were you and I told by Fed presidents, the Fed chairperson himself, who's not concerned, really, a little bit concerned about inflation, this was just a temporary thing? Well, it turns out that according to the Fed's beige book, it's not going to be so temporary. So here we go. With the Federal Reserve, talking out of both sides of its freaking pie hole. Now, this is another term that the Federal Reserve used today regarding the economy. Are you ready? Economic growth, this is beautiful, has downshifted. It's downshifted. They can't say it's slowing down, although they did. But they have to put these little fancy terms, like we're driving a standard shift car or whatever. We're downshifting to a slightly moderate pace. They love that stuff too. The appropriates, the moderates. So the economy is downshifting to a slightly moderate pace. It's slowing down, okay, but they don't want you to know. And inflation remains, this is beautiful too. This is quote, inflation remains elevated, are you ready? At a steady pace. Oh, really? It remains elevated at a steady pace. Let's not forget that one. Let us move forward here. Job growth overall is varying from district to district, okay? From slight to strong. Oh, I'm just totally clear on all this. How about you? It's astonishing to me, it really is, people, how the Fed could come out with these kinds of things and expect people to, I don't know, listen to them, buy it. I have no idea what the Fed really thinks of you and I. And actually, that's not true. The Federal Reserve believes that you and I are sub-morons who cannot walk and chew gum at the same time. They really believe that at the core of their being. And that's why they believe they need to rule the world. Because people like you and me, oh, no. We're too stupid to govern ourselves. We need some other entity to take care of us. because we're just little dummies. We're little dummies. How about no? How about we're not dummies at all? And you and I see as clear could be as to what's actually going on. Does any of what I just told you, take you by surprise? I don't think so, because again, if you've been following this blog, you knew all of this before the beige book. The beige book! Can't make it up, people. I dare you. I dare you to try to make up some of this stuff. I really do. Anyway, look, so that's the story with the market, what's going on today. And I just can't wait until tomorrow, you see, because tomorrow we're going to hear first-time unemployment claims from last week, continuing claims, and it's going to be another number staggeringly horrible. But we're just doing so well. Although the Fed's admitting here that we're downshifting, that the economy is slowing down. But the stock market is going to keep going higher because the Fed's going to buy it all, continue to do so. They're going to move goalposts, and they already are. What does this tell us here? This beige book. It's saying, okay, taper, how about it's not going to happen for the foreseeable future because the Fed doesn't really want to do it. They want to continue to buy assets. And our lovely, lovely members of Congress are going to allow them to continue to do that by giving them a blank check with your name on it. Isn't that beautiful? It's a beautiful thing. If you're the Federal Reserve, you're loving life right now. You're fulfilling your end game, your final solution to be the lender and buyer of last resort. All these central banks working together in concert to literally take over the world. And that's exactly what they are doing. People, love you a lot. Please share the video. See you in the morning.